Good morning, Richard Calhoun, Creekside Realty, here to discuss week 33 in San Mateo, Santa Clara, Alameda, Contra Costa County. Real estate, both single-family homes, condos, and townhouses. Initially, we are going to be using 2010 through 2019 for reference years. You'll get this if you log on before 9 o'clock. This is probably the most interesting slide. Here is the last data point. This is DUI subtracted from where you'd expect it to be. So what DUI is today minus the DUI for the 10-year median of 2010 through 2019. You can see earlier this year, it came crashing down along with the real estate marketplace. And this tends to be for people's perception. So basically, this indicator started to turn down middle of March. And I think almost everybody will agree the market was on fire middle of March, April, and even into May. By May, we were down here below the level you'd expect it to be. But now, just like the reverse of that is notice the rebound. I'm not ready to say that this is continuing to go up, but we've appear to hit bottom. The other thing that's really interesting is these blue lines are past downturns, and the slope and the duration is just about what you'd expect. For example, here's a perfect example. In 2007, you had the mortgage meltdown. That was the depth and the duration. Now we've had roughly the same depth and duration, and then you can see it plateaued before it dipped down again. That particular year, most of the past, there were only one. So the real question that there's no way to know the answer to is this leading indicator going to continue to improve? Will it stay flat? Will it dip back down? But it appears that the decrease in the marketplace is over. Now what we're looking at is the 4 different counties broken down so you have some idea of what's important to you, whether it be Santa Clara County, Alameda County, Contra Costa, San Mateo County. This is single family. Condos and townhouses are on the right. It talks about the number of new listings. The number of new listings is basically up from last week, which is not typically a good thing, but they're not up dramatically. More interesting is when you look at the total number of inventory that's available, you're down. You're down by 4% roughly across the board, 5% in Santa Clara County, only 3% in San Mateo County. Condos are a little bit more mixed. Overall, it's down 1.7%. So that's saying that the number of inventory that's available for buyers to pick from is decreasing, and it typically increasing. But now let's look at the sales. Sales across the board are up. We were only 629 last week. This week we were at 701. That's a 10% increase, well, 11.4% increase. That's encouraging. It's pretty much across the board. San Mateo County single family homes actually had a slight decrease of 2.5%. Condos are also up. That would also tend to suggest that the bottom's been reached. DUI this week is basically 44. Last week was 51. That's a decrease of 7. Remember, this is a unusual indicator. The lower the number, the faster the marketplace is. So the fact that these numbers are all down across the board is pretty amazing. Now, in San Mateo County condos, you had a decrease of 65, but that's because you went from 12 sales, which was unusually low, back up to 23. You had a doubling of your number of sales, and that's what impacts your DUI. Because of that significant fluctuation on a 1-week basis, I also have it on a 5-week basis, which is a much better indicator of what the market's doing. So offers accepted up 2% overall for the single family homes. In condos and townhouses, up 3%. And again, the increase in sales with the decrease in inventory causes the DUI, the leading indicator, to decrease. So we went from 47 to 50, basically a decrease of around 3 days. Now that may not, and it is not a lot. My threshold for the market changing is about 5 days. So we're not nearly the point where the market's changing, but the market is leveling off. Now you look at the number of closings. That's a little bit flatter, but remember, closings tends to lag behind because you have a 5-week period of escrow. So this is going back more in time. Number of closings on a 5-week basis, 2,800 for all 4 single family home counties put together. Some of the things here, frequency of overbidding still at 50%. The typical sale price to list price ratio is 100%. Appreciation is 21%. Now, Keep in mind, this is going back to using the entire calendar year of 2020 for the base. So you're really looking at a 2-year appreciation of 21%. That's still 11% per year, which is still good. But if people want to go back to paper money, where they had almost 50%, some areas were a little over 50. I think 56 was the highest appreciation. A lot were in the high 30s and in the 40s. Whatever number you want to take, if you had some appreciation around 40 and now you're at 20, that's a pretty major hit. You've lost 20% of your property values in just the matter of a few months. Now we're going to change gears a little bit, and we're going to look at just San Mateo County and Santa Clara County, single family homes and condos and townhouses. And we're going to be using 2015 through 2019 for the reference. And just while we're talking about that, yes, these are different reference points and different items. I am working and I'm in the data error correction mode right now of coming up with a uniform set of data, and I hope to be able to preview that next week again. This is looking at the sale price to list price ratio. Now this is closing, so this tends to be a lagging indicator, but even notice the purple line, which is the current line, is clearly no worse than the last 2 weeks, and it's probably a little bit better than the last 2 weeks. It's not as good as 3 weeks ago. It's better than 1 and 2 weeks ago. Basically, the way you read this is, there's several things you'll learn here. One, the blue shade and the red shade is based on where the left hand pulls away from the axis. So you can see the gray line here got right to the point where it was going to go into a buyer's marketplace. But then immediately it pulled back last week, which is the burnt orange line, and the purple week. So the fact that the lines are breaking away further to the right is an improving market. As you come down the left, that's a decreasing marketplace, which is what we have been doing basically since March 26th, the red dotted line up here, which was the best week we've ever had that I have data for, which was back to 97. So we've been decreasing, and now we're turning around and bouncing and actually have improved slightly. And this is again closed data. The indicator that's actually improved, the DUI, which is a leading indicator, doesn't have that 5-week lag time, which is why it's plateaued and actually came back up again, did a little bit of the saucer. So I'd actually expect this sale price to list price ratio to continue to increase unless DUI turns around and goes the other direction again. Same data slide, just only half as many data points and not all the markup. So you can see the dotted lines are the oldest ones. Back in June, we were much better than the dashed lines, which was basically the month of July. Now the solid lines are the last 4 weeks. And you have the yellow line is the oldest line, June 30th, and we're getting close to back to our July 30th. We're getting back to close to that level. Then there was the gray line, which was probably the worst line. Last week's the burnt orange, which improved slightly, and now we're back to the purple, which again is improved. This is looking at available inventory. That's the blue line. If you're on the yellow line, and I would call that on the yellow line, you have exactly this right number of inventory. So when you take the blended data, which is Santa Clara County, San Mateo County, condos and townhouses, put it into Blender, we have exactly the amount of inventory you'd expect. The number of new listings coming on the market dipped down and was below 80%. It's improving. It's probably around 87%. It looks like it's a little under 90. So the number of new sellers coming on the marketplace right now is a little bit reduced. I think that's probably because the market, everybody knows from the Mercury News and other media sources that the market's not doing as well as it was doing earlier this year, so sellers have decided to hold off. The other thing that's equally important and probably more important in my opinion, and I think I've sort of shared that and documented that, is the number of new offers. Look at this line climb. We're now above 100%, and again, I'll call that 100%. So we're selling exactly the right number of homes. You can see it's improved since week 31. Week 32 was the first week of significant improvement. Now week 33 has improved about the same amount. You can see it bottomed out up through about week 29, and then it started improving. That's why DUI started to go down. All these things are interconnected. It's saying that the buyers are coming back onto the marketplace. Here's the DUI graphically for the blended data. The blue data is the current data. You're back into what I call a red hot seller's marketplace. We're exactly where you'd expect to be. You're on a downward trajectory. If you look at it real carefully, I would actually say the blue line, the current data is a little bit lower, which puts you a little bit stronger into a seller's marketplace than we normally are. Yes, we clearly had a huge slowdown, but now that prices have adjusted, buyers are coming back out and willing to buy. This is the number of new listings coming on the marketplace, and you can see it's been coming down. This is the number of new offers coming on the marketplace, and you can see it's been going up. And generally, if the blue line is above the orange line, the brown line, you have a slower marketplace. When they're moving towards each other, you're starting to have recovery. This now is looking at DUI, and you can see we went up and then we've turned around and improved. I actually believe I'm missing the last data point on here, which I think is down here in the mid 40s. It's come down one more. I think this is going to turn out to be last week's data on August the 14th. I don't know why it updated. And this whole series here did not update. The days on market up here, it's 1 week missing. It sort of rolled over a little bit, which, is a little surprising. It rolled over so quickly, but it's up, but not as up as much. And that's from memory, so I could be wrong. Here's your prices. I didn't pay attention to what happened to prices, so I won't comment on them. And with that, we did the first recap. If anyone's got any questions, now's the time to ask. To join me live Saturday morning, you type in the green URL and add in the year 2022. To get to the archive on YouTube, you just put in the green URL. To get to the handout, you put in H and the 8-digit year, month, date code. So for today, it would be H 2022 08 20 20. And it is not posted. I was trying to get everything ironed out, so I will post it immediately after. It'll be up by about, I'll call it 10 o'clock. Give me a little bit of time. And for a specific episode, you put in the whole 8-digit year, month code. Does anyone have any questions for me? Not seeing anyone unmuted, I will continue. So now we're in week number 33 of 2022, which is this last data point right here. And the blue line is the actual data. The yellow line is where you'd expect it to be. So this is number of new listings in raw count. So we had just over 400 new listings come on the market. You expected a number closer to 480. With less new listings coming on the marketplace, that tends to heat the marketplace back up again. This is total inventory. You can see that we had a surplus in inventory over what you'd expect, but now we're back down to the level of inventory you'd expect. So we have exactly the right number of choices. And by the right number, the 5 years that I'm using, 15 through 19, were 5 good years with limited inventory. So we're back to a limited inventory situation. Number of new offers this week in the blue is above the yellow. So we actually had more offers accepted than we would expect to have accepted. Here's the heat map based on DUI for single family homes only in both counties. The redder the color, so Foster City, Redwood City, Cupertino, Mountain View, Sunnyvale are the hotter areas. The blue areas, the expensive areas in San Mateo County, are the coolest areas at 93 days. And the bulk of the area is I'd call white, which means it's in neutral, somewhere between 42.5 and 77.5. And you can see the numbers here. And most of the areas are the under 50. There's a couple in East San Jose and the coast that are at 53 days. The rest are in the 40s, and even, some areas, the hot areas, 25 days, 35 days, 28 days, 34 days. So you can see it's there, and you can see even Los Altos, Palo Alto's got a slight amount of pink at 40 days. Here's my heat chart. So this is looking just at DUI for the single family homes at the top, both counties, and then condos, townhouses for both counties at the bottom. And basically on the left-hand side, you go back to May 7th, nice and red. You can see you got white, you got some blue, but notice how we're starting to get more red over here, more pink coming back. So it's starting to show that the market's improving a little bit. A very visual way of doing it. And the data here for condos was completely white. So condos is still slowing down a little bit. I don't know why I didn't post it on there to get rid of the horizontal lines, but I'm pretty confident it was completely white. Here you can see part of my problem with the DUI. It's dropping. No, it did not drop down to here. For some reason, even though this is all done by Microsoft, it's not plotting my most recent data point. So I apologize for that. I think this is the 18th, so I'm only missing the 19th and the 20th, but there's 2 dates that should be there, and that's why it's down here, and I have to investigate that. This is looking at days of unsold inventory. This is going to be accurate. So you can see now that you're down at 40, and we actually already did this graph. Here's the magnitude of overbidding. Now, if you look at this initially, it looks all white, but if you look up here, there's a little bit of blue, and I'm not seeing it Saratoga Las Gatos is supposed to be, I think I did something wrong here. I think I got the wrong map. I don't think this map goes to these numbers because that looks right, but the Saratoga Las Gatos, I would be able to pick up that on here, and I'm not. And Cupertino Sunnyvale, I might almost say I'm picking up Cupertino Sunnyvale right through here, being a shade of pink, but I don't know why Saratoga Las Gatos is not showing up. Everything else would be correct in white, but I question that. Again, you can see my last couple data points here are just blown up for some reason, but the trend, the overbidding is coming way down, and that is continuing. Buyers are not overbidding the magnitude that they were overbidding before by any stretch of the imagination. Here is the magnitude. You can see that it turned around last week, week 32, week 31 was bottom. It plateaued. It actually went up a little bit. I can't tell you what that number is, but this was just over 100%. This is approaching 100.7%, maybe something like that. So 100.1% to 100.7%. But a year ago, you were way up here at 8%. And earlier this year, you were up here at 16% of overbidding. So less than 1% overbidding is down dramatically. This map, I think the two maps are reversed, and I thought I corrected that. See how Saratoga Las Gatos is blue here, but on this map here, it should be white in color. So the two images of the map got reversed with the map, and I thought I corrected that. So my overbid frequency map is actually my magnitude overbidding map, and I'll correct that before I post it. So here again is the frequency of overbidding. You can see it's coming down. We're now below 50% on all the areas, and ignore this blip up, and it's missing. The last data point that's on here is the 18th, I believe. Here is the frequency of overbidding. You can see it got way down to 35%, and now it improved. And this is for macro data versus just the individual components. And now you're up to 44%. So still almost half, just under half your sellers are getting more than their asking price. And that may sound crazy, but even in the worst marketplaces, something like 15% of the sellers tend to get more than their asking price. This is mapped correctly. It's the pricing area. In this case, red has nothing to do with the heat of the market. It's to do with the price. So the redder the color, the higher the marketplace. White, which is Redwood City, is the median priced area. And then as you go blue, you're below the median price. You can see that the least expensive areas are down in the southeast portion of Santa Clara County or up in the north part of San Mateo County. This is the median pricing of the different components. You got condos and townhouses in Santa Clara County, and you can see prices came up and came down a little bit, much more stable than in the single family. But again, if you go back, we're getting back probably equal to or below the pricing we were in 2021. Now, if you look at single family homes in Santa Clara County, you came up quite a bit, and you can see clearly roll down. And with this last data point here, you're probably coming back here to somewhere around 2021, early 2021, before the peak. You've lost some of the appreciation in 2021. Same in San Mateo County, where you come back and now you come straight across. You're basically back here to April of 2021. So you haven't lost your 2020 appreciation, but you've lost a good portion of your peak appreciation in 2021 and all the appreciation in 2022. Here is the actual numbers, and these numbers here aren't bad for an appreciation for a 2-year basis. 20% for the most part, some areas around 10 percentile. So 5 to 10% per year, that's not bad. Where it becomes bad is when you compare it to where the peaks were over here. Now, these are saved, but you can see that, for example, East San Jose was at 46% just on July 21st, and now it's down at 22%. It's lost half of that. You can see that Saratoga Las Gatos was 57% at the end of May, and it's now down to 18%. The person that bought the peak right here, it's lost close to 40% of the value of their home. Now, it's not quite that bad because the 40% that's disappeared is based on the lower amount, not on the higher amount. It would drop fairly significantly. All these areas that are highlighted in this column had their peak on May 28th, and they come over to where we are now just on August 20th. So not even 3 months later, and look at the price drops. And these are close to real price drops because you can't have a micro shift. If you look at the county overall, you can have a shift from more expensive area to less expensive areas. And to some degree, I think that's happening. And that's why, you went from 43% down to 16%, where some of these areas are having a higher percentage over their 2020 pricing. Once you're in a micro market area, it's hard to have that shift. So these are probably getting at least ballpark on what happened to real property values. The outlier, obviously, is San Mateo County at negative 16%. So homes there, the median price of a home, a condo, townhouse in Redwood City, San Mateo City, San Carlos, Belmont, all Burlingame, all those areas is actually 16% lower. I believe what's happened up there was there was a huge influx of high density housing in Redwood City specifically, and they're now coming on the marketplace and being resold. So the pool has changed significantly, and that does happen when you have a huge influx of new development. Here is your magnitude and frequency of overbidding, and here I have the colors correct. So I guess I changed them in my table and not on my map. So now you can see Saratoga Las Gatos at 98, it's got blue color. Your Cupertino Sunnyvale at almost at 103%, it's a little pink. The San Mateo North at 106% is, a brighter pink. Your DUI overall, which is the leading indicator, you can see is starting to come back red. Frequency of overbidding is pretty pale. The frequency is decreasing. And then on your pricing, the middle number is the median. Number to the left is the lowest 10 percentile. The number to the right is the highest 10 percentile. So you can get a range on each area. So the way I envision people using this is if they're looking at it, they find what micro market they're looking at, and then they can get a sense for what kind of market conditions and what kind of price range they're in. Or if they are new to the Bay Area and they just want to say, what price am I in? They can find out what areas they can likely find a single family home or a condo townhouse by the bounds, because 80% of the homes are between the left number and the right number. Here's the breakdown, your inventory, Santa Clara County. I mean, it's back to in the red, which is a hot seller's marketplace because we're only at 88% of the inventory. There is a lack of inventory out there. San Mateo is blue because at 134%, that's going to be a weak marketplace or a strong seller's marketplace. At 114 for condos in Santa Clara County, that's a balanced marketplace. It's getting towards the upper end of a balanced marketplace. And Redwood City, Bay Cities is at almost 4 times the inventory. And again, that's that huge influx of low end, high density pricing but homes that were built in those areas to try to take care of our housing crisis. Here's your DUI. Everybody's in the black. Everybody's between 40 and 80 days. These were mostly in the high 50s, low 60s. That's where Bay Cities is still at. But you can see they've improved fairly dramatically. You're overbidding now. The magnitude is right about 100%. It is 102% in San Mateo County, which is why it's got the red color versus neutral, but most of them are neutral. Frequency of overbidding, anything between 33 and 50 is a neutral, and the only exception was last week's San Mateo County. We're under 50% of the sellers getting overbid. Here is the appreciation from 2020, and this is the peak appreciation. So you can start getting an understanding the magnitude of the drop. You were at 18, 19, 25% for single family homes in Santa Clara County, up to 43%, now down to 17%. So you're selling for below where you were in 2001, at least below the peak. Same for San Mateo County, 24% up to 38%, down to 8%. They're getting back to the point where they're soon they're not quite there yet. They could be below peak pricing in 2020, but I don't think so, because 2020 was COVID, and just as we were getting into peak pricing territory, we had the shelter in place, so the market shut down, and then it came, prices actually dropped real rapidly, and then they came back and we had a climb. We never really had that peak overshoot period in 2020. We ended the year probably at the peak or close to the peak. Now what we're doing is focusing on Santa Clara County single-family homes. This is your DUI. You can see it's coming down. I also believe there's a data point or two missing on this slide. This slide might be accurate. This is DUI minus the delta, so we're getting very close to the DUI we'd expect. Actually, I think it's missing the couple data points because from the graph, it looked like it would have been under by just a little bit. This is probably missing it. The average days on market, which I don't think is all that valuable because it's a lagging indicator. Yeah, we're missing a data point because here's the 1st of August, here's the 1st of September, the 15th would be here. So here we're missing a whole week of data. So I apologize. This I know is brought up today because I do it myself. You can see the days on market at 30 for median, 48 for average. It's still very respectable, but that's because the market was so hot and it's a lagging indicator. If you come down here and look at 27, yeah, that's starting to be one of the higher numbers up there. Yes, there are higher numbers. Median days, 20. I mean, you now have to come all the way back to 2012 to get a higher median days on market. But what the real takeaway is DUI. This has actually been improving. This was up to 60 just not too many days and weeks ago. Now you're down to 42. And so we're better than we were in 19. I don't know why these numbers would be 0. I'll have to update those because I definitely have that data. Something happened with my scripts to process my data. But you can see we also had numbers like 125 and 210 back in the mortgage meltdown days. At 42, we're still fairly good, but the price at 1.6 million, that looks good. But this is where you start seeing some of the chips in the armor. Sales, 908. Yes, we are now above 2019. We're doing better than 2019, which wasn't that bad of a year. But other than that, you don't have a single year until you come all the way back here till 2007. And that was the second slowdown. And I don't know what caused the second slowdown in August of 2007. August of 2008 was the stock market meltdown. There was the mortgage meltdown in February of 2007, but there was a second slowdown in 2007 around August. You're now the third worst number of sales. So sales are starting to pick up because for the longest time, we were the absolute worst. And if you come down to overbidding, we're at 100.1%. The frequency of overbidding is 41%. Those are fairly low numbers compared to what you're looking at here. And it may surprise people, but when you look back here, it's hard to find numbers below 100%. You got 99% in 2011, and you got 98% in 2008. But other than that, you're above 100%, and that's just because sellers are very resistant to taking below. More sellers are willing to go above; they're not willing to go below. It's also because we're basing this data on the list price at the time the offer is accepted. So if a seller reduced their price, that would not it's not calculated on the original list price, but on the price at the time the offer is accepted. And then the sale price, here you can see we're at 1.6 million. We were at 1625 last year. So there you can start seeing that negative appreciation over a year basis. I think what I might do just out of kicks is go back and look at what the first time we reached $1.6 million was for a median price. This is comparing apples and apples, but it's looking in the rearview mirror because we're going back to August. And with that, we're at the time to answer any questions. And if I have no questions, I will call it a day. Why don't we do it? Why don't I go back and find the first time that we hit $1.6 million? Let's see how quickly I can do this. And if you have any questions while I'm doing this, please ask away. Okay, so I'm scrolling back through the numbers. We got the peak pricing for Santa Clara County single-family homes was about 1.985 on May 8th of this year. And the first time we reached 1.6 million, it may be May 1st, 2021. Yeah, so let me do a screen share of this data I think I have to do a new share. So I think you're now seeing this table. This is the median price for Santa Clara County single-family homes in this column. And you can see here, actually, April 29th of 2021 was the first time we reached $1.6 million. And that's back to where we are now. So that gives you an idea of what's happened. And since nobody's unmuted themselves or asked a question, I will wrap it up and see everybody next week. Take care. Bye for now.